Hey traders, happy Thursday to you. Welcome back to The Trading Edge. If you guys are new, this is a daily video that Jason Greystone and myself put out for our Tier 1 trading clients. However, since we haven't officially launched yet, coming very, very soon, we're just putting it on YouTube for free to give you guys a chance to experience one of the benefits of being involved in our trading community and being involved with our educational services. In today's video, we're going to take a look at a few different pairs. We're going to follow up on the euro-dollar trade that I talked about 2 Trading Edge episodes ago. We're going to follow up on the dollar-yen trade that Jason Greystone talked about in yesterday's Trading Edge video. And we're also going to share with you another opportunity on the New Zealand dollar, looking more long-term, kind of an idea, something that you guys can start looking at right now and that you have some time to figure out how to be involved in. We're also going to talk a little bit about entrepreneurship and investing in your trading. So a lot to talk about today. Let's start off by heading over to the charts and showing you some technical analysis. All right, gang, let's get started on the euro dollar. And if you're new, if you didn't see the video I put out earlier this week, make sure you go back and watch that first because it's going to give you a little bit more perspective on what I was originally looking at. But you can see that price action has worked up into that 2618 kill zone. So we're looking at our double top formation up here. We took our Fibonacci retracement tool. We measured out our zone. You can see a few of my fibs are missing. I was just doing some fib training, so don't mind that. But we're looking for a kill zone right in here for our 2618. Well, as price ebbed and flowed, right, meaning it kind of wiggled its way up towards that zone, we actually put in something else. And this is going to be an advanced pattern formation. This is going to be a potential bearish bat formation. It's going to look something like this. We're going to have an X leg starting up here at the top of our double top. We're going to have an X to A, that's swing high to swing low. This first retracement right here, we'll go ahead and change this color. That's going to be our A to B leg. We then put in a retest of our previous structural lows. That's going to be our B to C. And what we'd be looking for is a C to D completion right up here at the 886. So with this new information, it allows you to kind of change your perspective a little bit. We're still looking for the same type of trading opportunity, which is a short opportunity in this zone. But it allows for really different possibilities of entry. For someone that is not a 2618 trader, for example, well, where before you didn't have a chance to get involved, now if you're an advanced pattern formation and trader and you trade the bat formation specifically, now you have a reason for entry right up here at 120.73. Also, if you are a 2618 trader and let's say you're a conservative one and you needed a reason for entry and you did not get that reason for entry yet, well, maybe you can use this bat formation as well as a reason for entry in your 2618 trade. The one advice that I would give is know how to trade it because there's going to be 2 different ways to look at this depending on whether you're trading this as a bat formation or as a 2618. And here's what I mean. For a 2618 trader, they're going to be looking for a risk reward that looks something like this. Let's just say each trader is getting involved here at the 886. They're going to be looking for a stop loss is going to be above the double top. Both are going to be there. I mean, they should be at least. You can do whatever you want, but that's what I would advise you do. For a 2618 trader, you're looking at a retest of your previous structure lows. You're looking at a pretty decent, almost 3.5 to 1 risk reward here. If you're strictly an advanced pattern formation trader, you're going to be looking at something slightly different. You're probably looking for a reward coming right back down into this B leg. And you can see it's still a decent risk reward. You're looking at about almost 1.3, 1.4 to 1. But obviously not as big as that 2618. So I would caution you to know what you're doing. And how do you know what you're doing? Well, you refer to your trading plan. And if you don't have a trading plan, then guess what? You probably shouldn't be doing any of this. So there's my advice, right? Do what your trading plan tells you. If your trading plan says to take this scenario like a 2618, you take it like a 2618. If it says to trade it just as an advanced pattern formation because you're not a 2618 trader, well, then there's no need to take targets down here because you're not trading it as a 2618 trader. And of course, there's everywhere in between where you can do both. We teach a ton of tactic where you can do, especially if you're using multiple targets. But if you don't have anything in your rules that says how to handle this situation, the best advice I can give you is to stay out of it. So that's the euro dollar for you. We're gonna go over to the dollar yen next. This is a follow-up on the video that Jason Greystone did yesterday, and we're gonna look at this on the daily. And what Jason was looking at was a retest of previous structure lows here on the dollar yen. And we kind of have a similar situation where the way that price has ebbed and flowed, right, within this kill zone down here. So this area in which he was looking for long opportunities, buying opportunities for you guys that are newer and unfamiliar with the lingo. Long means buying, short means selling. We have another potential bat formation. Same thing, obviously inverse. This is going to be a bullish bat formation. So we have an X leg down here, X to A, great example of using an anchor leg instead of an impulse leg as our initial leg. X to A to B, B to C, and then the same thing, a CD completion down at this 886. So we won't dig too deep into it, but same type of scenario where you have options on how you want to enter. You can now look at this as strictly an advanced pattern formation and enter based on that. You can use it as part of your CTS score, your combined technical score, which is a valuation system for finding or I guess for quantifying trading opportunities. Or you can stick to your original guns and say, hey, I'm going to look for a structure-based trade down at this level of support and trade it that way. Again, there are different options in trading, and that's the beauty of what we do. What allows different people with different styles to get involved in similar opportunities in different ways. So the last pair we're going to look at, let me just check on dollar Canada. I'm actually in this trade. It wasn't on my agenda to talk about today, but I got involved in this yesterday. Yeah, and we're seeing something pretty decent. I'll talk about this really quickly. But I got involved in dollar Canada yesterday, right at the close of this green candle, and we're looking at a high momentum candle, and you can see that we had a nice rejection of selling pressure up here. And what I mean by that is price action came up. At one point, this candle, you can see the close right here. At one point, the close was up here, and it got beaten down. And looking left, two levels of structure that I was paying attention to was boom right there and boom right here, kind of this zone. And we got a nice rejection. I entered short last night at market, and looks like I'm probably sitting right at about break even right now a little bit. But this follows up on a trading idea that I shared with you guys last week in the Trading Edge. And this is why you have to be consistent with these video guys. Typically, our ideas are going to build on each other. We watch a set portfolio. So we're consistently adding and removing and adding, removing and switching analysis on our different pairs. And a lot of the time, what we look at in this particular video will directly relate to an opportunity that we saw in the other video. And if you can remember last week on the dollar Canada, we were looking at a potential buying opportunity right in here at this line. And non-farms blew that out the water. We got a lower low, lower close. That switches my perspective from potential buy to potential sell. And that's why I was looking for this opportunity. But the one I want to show you was New Zealand dollar. And this is interesting. Currently, New Zealand dollar is trading above our previous outside return. You know, very similar to the dollar Canada, right? Price action had come down. We consolidated, did all this funky stuff. We don't need to draw out all these lines, but we came up to retest our previous level of structure resistance. We held, we had a rising channel here. I actually thought we were going to see a little bit of relief and a bearish move here, but so far we didn't. And today we're putting in a bullish day. If we can close above this level, right? If we could put in a bullish day that closes above yesterday's highs, there is a good chance, in my opinion, of course, in my professional opinion, that we're going to see a test up to about 73.50s. So movement from about 72.40s to about 73.50s. So a good 100 pips of potential bullish opportunity in here. So for you guys that are longer term traders, this is a zone that you want to put on your radar. If we get that higher high, higher close, we can certainly look for buying opportunities. I know I certainly will be looking for buying opportunities in advance of that 73.50 level. So hopefully that gives you guys something for the longer term. I hate giving you videos where price is like 20 minutes or 20 pips away because it takes me about 2 to 3 hours to upload this and produce it for you. But here's something for the longer term as well, and certainly something that we'll probably follow up on in future Trading Edge videos. So I hope you guys enjoyed that. And I want to end things by talking a little bit about investing or investments. And I shared two pretty cool posts on social media yesterday. One was a picture of myself, and the caption read, "Finally completed the foundation course, a training course that was 10 months in the making. And another one was about entrepreneurship, and it's an entrepreneur, a noun for those who are willing to stay up late and put in hundreds and hundreds of hours of work instead of doing 40 hours of work for someone else. And both of those posts got some really good responses. And you have to understand that trading is an investment, and it takes a lot of time, a lot of effort to really see the benefits of it. A good example is the last episode I did, we talked a little bit about resilience and fighting through drawdowns. Or many of you comment, Akil, you make it look so easy when you do your analysis. And yeah, it looks easy, right, to you guys viewing in, but you don't see all the years and hours of hard work that put into finally finding something that works, right? Imagine like an iceberg. You guys just see the tip. Well, there's that big base level that's underneath the water that you guys don't see. And there was a comment underneath the post that said, hey, Akil, backtesting is the same way. Spending hundreds of hours backtesting to finally find something that works. And that's the part of trading that isn't glorified. Everyone wants to see the profits and the lavish lifestyle of private jets and fancy cars and doing whatever you want whenever you want to, all of that fun stuff. But what they don't show you is that it takes a lot of work. And I'm talking years of study, years of mastering your craft. And really the mindset that you never have truly mastered it, and you have to be willing to learn each and every day that you're in the market. And the point that I'm trying to make is it really is an investment. If you want to be successful at trading, you have to think about it that way. You can't expect instant gratification. You have to spend a certain period of time, or you have to expect to spend a certain period of time learning the craft, working on the craft, taking 2 steps forward, 1 step backwards, 3 steps forward, 4 steps backwards, going through that grind before you finally get it. And once you get it, man, things can be very awesome, but you have to be patient. Just don't expect too much of yourself right away. I know as a sneaky salesman, right, I'm not supposed to be telling you that, but that's the truth, right? I'm not trying to sell you products. I'm trying to give you a realistic expectation of what it looks like to become a consistently profitable trader. So hope that hits home with some of you guys. Of course, some of you guys are going to hate that. That's what haters do. They hate. Let them hate. We love it. But I appreciate you guys watching me as always. It is a big favor to me if you hit that like button, if you take the time to retweet this, to share it. And of course, if you're new, subscribe. Not only here, but subscribe over on www.tiered1trading.com. Our launch is coming very soon. You can see kind of the website design behind me. And make sure you're on that list. That way you'll know when the launch is. You'll learn about how to set up your free membership. And for all of you guys asking about pricing, all of that information will be made available if you're on that email list. So get on the list. Do it right now before you forget. All right? I'll see you guys next week. Until then, plan your trade, trade your plan. Take care.